away. Good morning, everyone. I was born in 1965. Great time to benefit of the 60s in a family of traders and entrepreneurs. So my father was going around windmills and farmers around the Dutch-Belgian border, delivering grain to his customers. So we met my mother with one of the windmill operators. Then times changed a bit. Winds changed. Before age 10, I saw my father's factory burn down twice. Second time, I was old enough to realize what was going on. Went across the canal. See, at the top of the roof, the guy throwing buckets of water was actually my father. So he survived that. And then despite a terrible car crash, where luckily my both parents survived, even that couldn't keep him back as he kept pushing through. Then came the disruption of the shipping and transportation industry around the port of Antwerp with the advent of the containers, and times got really rough. Business was very, very tough. And still, my parents and my father did not give up. And there was one thing in particular that they did not want to compromise on. That was education, to give a perspective for their children. So at age 21, I graduated from university, saved a bit of pennies, got a scholarship to travel and study around the world. And as I look back on that, I think, wow. With adversity coming across, I could as well been a child left behind. And am I not lucky? I grew up in a country that has deeply in its roots of the society a couple of things that probably were the helping hands coming at our aid, such as good social security, a good welfare and healthcare system, and scholarships. And having said that, as we just heard, we are here to talk about even more work on a better future. And I wonder, will that future and that safety net still be there for my children, for your children? Because they grew up in quite a different world. So my parents probably used to go to the church pastor or the doctor or the notary to go to someone that was their trusted party. So will you go to your insurance broker when you look for a trusted party? Will my children do that? Will yours do? One thing I know, they do live in their path of life, they do live in a world full of data. They have data in their pocket, in the air, data everywhere. So this is a group, we are a group of insurance companies that started to think about what would it take in this data age for insurance as an industry to make use of that wealth of data, avoid that it becomes a tsunami that takes control over us, but instead we can have a network that people value and a network of trust. It's quite a different world. Here are just some facts. They're not just relevant to the insurance industry, but they're kind of mind-boggling. Motor insurance, which is the cash cow of many insurance companies, may no longer be there in a few years. So these are some hard facts of what this data-driven world is moving to. So as we thought in this group about using distributed ledger technology, we thought, well, how specifically could this come of use to benefit the end policyholder? And I'll highlight a couple of key things that we most value. 3. One is smart contracting. So when you sign a contract, my father used to say, son, never sign something you don't understand. So these are lengthy pieces of paper. Wouldn't it be better to put that in computational logic? Because then when something is going to happen, we can ensure all parties really understand what will be my interpretation, rather than just some piece of paper in a drawer or entered in 5 different systems across brokers, insurers, reinsurers. That's the smart contracting. But the second is smart assets. The things that we insure, our house, our assembly lines, our factories, our bodies, they all have constantly data, like this. Smart data. So smart insurers don't just wait until the loss happens, but use these data that come across to interpret in the network and perhaps do something preventative, rather have the loss, prevent the loss to happen rather than pay for it. So smart contracting, smart assets, and lastly, smart execution. At the end of the day, still we have in a value network a transaction to happen. We still spend a lot of time making sure the broker, the insurer, the reinsurer all agree until a payment can be made. We all, in separate pipes, in separate systems, verify the counterparty so it's not fraudulent, it's not on an embargo list, it's not the money laundering. And we all do that separately. That's the third part of smart execution that can significantly accelerate this, we believe. But still, I think this still may all be a bit abstract. My light bulb really went on about 3 years ago. I was working in India, and when I realized what really this can do to daily life of people. If you talk to kids like this, or employees that I had, they will tell you their parents cannot even prove the ownership of their house. Someone can come along and just very easily disprove that. So proof of ownership, for example, and many other things, and you may have heard about the Aadhaar program that President Modi undertook in India. So my real question is, technology, is it not just rather a means to an end? Let me give 2 examples of how we practically try to apply this. Health insurance. This is a statistic of a fairly advanced market, the United States. So we all grow older, we live longer, that's good. So that healthcare costs rise is no surprise. The yellow bit is a surprise. Disproportionately, the administration, the share of administration cost is overtaking the actual healthcare cost. Multiply this with the massive growth of population, this is what we should be spending health insurance on. A simple thing like birth certificates in many countries are not in any central register. I was told recently, even in the United States, there is no central register of death certificates, which is quite handy for life insurers. So these are the very practical things from emerging to developing markets, having surety for people's daily life. Second example, agriculture. Our resources, like our pension funds, may well deplete if we don't do something about it. One of the concrete things that at Swiss Re and other companies we do with agriculture insurance is being just more smart with data. So when a drought is upcoming, we might as well use parametric data, these are satellite or drone data, that allow us to see trends and pay out before the loss happened. So rather pay out so the farmer can use water irrigation or anything so that we don't lose the crop or the cows don't die of drought. We actually undertake preventative measures. But that requires a quite different way of dealing with the insured using technology. Smart data is just one example. And this is real. So this is a picture of Kenya, where the eventual claim is actually paid out on the phone using M-Pesa currency. So parametric risks for agriculture, and something that you may hear about at this conference as well. So how do we concretely make this happen? We started about 15 months ago, a bit more. I had never thought this large group of insurance companies could get anything done. I thought this was going to be some United Nations meeting, big discussions, no decisions. So from 5 became 15 and more. Midway, some people said, hold on, it's going to get worse. Effectively, we did pretty well. So we had a prototype of a natural catastrophe cover early on ready. We then decided to move from a joint venture into a permanent company. And surprise, surprise, after a long search, the group decided to headquarter here in Switzerland. So I'll be the CEO of this company, and we are just registered 3 weeks ago. There's not just a friendly, let's hold hands and be happy insurers together argument about it. There's hard economics. One piece of data is 800 billion of premium that we lose because of something we call the protection gap. So Disneyland, that's where we all live. That's the dark yellow or orange bit here, United States, Europe, etc. $1,500 of premium per year, we, on average, per capita spend on insurance. The average around the world is not even 50. Most don't even have access or cannot afford or do not trust insurance. So that's really the economical problem we are facing with. There's an interesting study by the Geneva Association, a think tank, that explains that in further detail. It also has a good message. More than ever, technology is there to help us do something about this. What we have done concretely, we've worked on basically what is the asymmetry of information between the players in the industry. So on the left you have brokers, insurers, reinsurers, each having their different pipes of how they do contracting, claims, etc. It just takes a lot of time. Customers, policyholders aren't particularly impressed by insurance speed to market or rapid response times. So we're moving to a network world, from a sequential way of working to the right here, a network world where when data is available, and that is of use of all, like a natural catastrophe event, it is much more quickly shared whilst not giving up privacy. This is our ambition, to basically close that protection gap, make insurance more accessible, relevant, and affordable. And that's why we need to really question the way we distribute our policies, our risk management across the globe. We go about this in 3 steps. We build a platform. Think about Jeff Bezos, took him 10 years or more. That's what we do. Risk classification, contracts, templates, counterparty data management, all the robust infrastructure. Once we have that, then you get economies of scale with other lines of business being brought on board. And finally, a networking effect. In that last phase, we do not see the central group, only the B3I central group having all the applications, but as the by the App Store analogy, if I may, the players in the industry coming with their own applications across segments and regions, but having one backbone that everything can work on. So that's our ambition. We are ready to go. We will establish in the center of Zurich, and look forward to, hopefully, to many of you who will go on this road together with us. Thank you.
Thank you so much, Paul. Excellent stuff. So I'm going to have you have a seat over there. We have a format that we're trying out this year, which is you will hear a point of view that's presented, and then someone's going to provide a slightly different opinion. Not necessarily a fight. There's no boxing match in here, but a slightly different opinion that will be presented, and then we'll have a panel conversation. So to present that slightly different opinion is the CEO and co-founder of Etherisc, also wearing some really nice shoes. Please put your hands together for Stephan. Right on.
You know what I think is the most interesting and the most important change that blockchain can bring to the insurance industry? It's a new generation of products. And more importantly, it's a new generation of people building those insurance products, decentralized insurance products. When we put the first insurance application on the Ethereum blockchain in summer 2016, none of us had a professional background in insurance. We were recently approached by two young guys from Puerto Rico, both software engineers. They have seen our flight delay insurance, which is in production for almost 2 years now. They have seen our flight delay insurance and they approached us. Puerto Rico has a big issue with hurricanes. A lot of people suffer from the losses that the hurricane incurs. They need to leave the country, and they want to do something about it. They have looked at our flight delay insurance contract. It's open source, it's freely available. They played around with it and they started implementing a weather-based hurricane insurance. They reached out to us, they asked for our help if we can support them with that development, and of course we can. We recently announced that we will work together on this. Now the important aspect here is, those guys, two software engineers, young guys from Puerto Rico, they are now building insurance products. They would not even get a bank account in Switzerland. Those is the new generation. Those people is the new generation that are now building financial products and insurance products. And what's more important about the products they are building, those are decentralized insurance products. Now, what does that mean? The core business process of insurance is put in a piece of software, a smart contract. The smart contract acts and behaves exactly like an insurance would do. It collects premium payments, and under certain conditions, when a damage occurs, it pays out claims. That's exactly the core business process of an insurance. Now, if you put the core business process of the insurance industry in a piece of software, do you think your business model will change? If this piece of software is open source and freely available, do you think your business model will change? I think so. And yet, the incumbents in the insurance industry are looking at blockchain and asking the question, what can it do for our business? How can it make our business more efficient? How can we save costs with blockchain? I think that's all totally good and valid, but I think it's missing the point what this technology, what the potential of this technology really is. With Etherisc, our mission is to enable a wide range of decentralized insurance application of small and smallest insurance businesses. We want to enable them to bring exciting new insurance products on the blockchain. And we invite the insurance industry to come and talk to us and get in dialogue. And I think some are more ready than others. And I think the question should not be, how can we apply blockchain to the existing insurance processes, to the existing insurance business models, but rather, in a decentralized insurance ecosystem, what role will a traditional insurance company play? What role will your company play in this upcoming ecosystem? And that's what I'm happy to discuss now with the panel.
All right, excellent, thank you. Have a seat, have a seat. Super.